There's this one word that's been haunting economists whenever they talk about China: Japanification. It's this chilling idea that China's incredible economic story might be headed for the exact same cliff that Japan fell off back in the 90s. A huge crash, followed by, well, decades of stagnation.
So, is China really doomed to repeat Japan's famous lost decade? I mean, this is the multi-trillion-dollar question, right? Because, let's be real, if an economy as massive as China's just stalls out for 10, maybe 20 years, that's not just a China problem. That's a global problem. It changes everything for everyone. So today, we're going to break it all down. And when you just look at the headlines, the comparison feels almost perfect. You see these images of futuristic cities, but you know that just beneath the surface, the economic engine is seriously sputtering. A property bubble that drove growth for decades has finally popped, and it's left behind this mountain of debt and a slowdown that just feels so familiar. To really get a handle on the risk here, we have to start by looking at just how spooky these similarities are. It's almost like watching a replay of history, just on a much bigger stage.
I mean, the script is practically identical. In both countries, you had a massive, 2-decade-long housing boom that came to a sudden, screeching halt. In both cases, people and companies started saving money like crazy, which meant that consumer spending stayed stubbornly low. And when the crisis really hit, what was the first move for both governments? Not to help their own citizens spend, but to try and export their way out of the mess.
And this chart just nails the core of the problem. What you're looking at is fixed asset investment. That's all the money being poured into buildings, factories, infrastructure, that kind of thing. Now look at Japan. Growth just craters, going from an average of 4.7% in the 80s to basically zero in the 90s. And now look at China. It's this same story unfolding. This isn't just a little slowdown. This is the main engine of the economy just seizing up. So when this happens, when a whole country is basically drowning in debt and everyone slams the brakes on spending just to pay it off, well, economists have a very specific name for it.
It's called a balance sheet recession, and here's what that really means. Imagine interest rates are basically zero. Money is practically free to borrow, but nobody's taking it. Why? Because households and companies are so freaked out by their debt, they're in full-on survival mode. They're not thinking about investing or buying new things. All they're focused on is one thing: cleaning up their own books and paying down what they owe. And when everyone stops spending like that, the entire economy just grinds to a halt.
Okay, so based on everything we've looked at so far, you'd be forgiven for thinking China's fate is sealed, right? But this is where the story takes a really sharp turn. Because once you start digging just a little bit deeper, you realize that China's crisis is actually profoundly different.
So let's get into it. Let's unpack the 4 critical differences that suggest China isn't just repeating Japan's lost decade. It might be facing something way more complicated and, honestly, potentially way more dangerous. All right, the first, and maybe the most important difference, is just plain wealth. When Japan's bubble popped back in 1990, it was already a super rich country. I mean, one of the wealthiest on the planet. They had this huge financial cushion to fall back on. China, on the other hand, is hitting this massive economic wall while it's still a middle-income country. This creates this nightmare scenario for Beijing, this phrase you hear all the time: growing old before growing rich.
And that wealth gap isn't just some abstract number. It has a huge impact on everyday life. Look at this. In China, people have to pay for over a third of their healthcare right out of their own pockets. Compare that to just 13% in Japan back in the day. On top of that, their state pensions replace a much smaller chunk of their income. This forces people to save frantically for retirement and for any medical emergency. And that absolutely crushes the consumer spending the economy desperately needs to get going again.
And this isn't just some fringe theory. It's a huge warning coming from major institutions like the World Bank. The population is aging so fast that the country's wealth just hasn't had time to catch up. And that leaves its social safety net looking dangerously thin.
The second big difference is the world outside their borders. Back in the 90s, Japan was a key U.S. ally, and it had wide open access to the world's richest markets. It could literally export its way out of its domestic problems. China today, it's facing the complete opposite. It's facing a world that's building walls, trade wars, tech sanctions, and this huge global push to de-risk supply chains away from China. That export escape hatch that Japan used, it's closing, and it's closing fast.
And then you've got the demographic time bomb. This is just, wow. China's fertility rate has fallen off a cliff. We're talking just about 1 birth per woman. And because of the legacy of the one-child policy, you've got this entire generation facing what some are calling a triple burden. Think about it. They have to support their own kids, care for their aging parents, and somehow save for their own underfunded retirement. It's an impossible squeeze, a kind of demographic pressure that Japan, even with its aging problems, never faced on this scale.
And finally, you have the government's response. Look, in a deflationary cycle like this, the textbook solution is pretty straightforward. Get money into people's hands to boost demand. But Beijing has this deep ideological resistance to what it dismisses as welfarism. And because they're so hesitant to send direct help to their own citizens, those deflationary forces just keep getting stronger and stronger, with no real relief in sight.
Okay, we've seen the eerie echoes of the past, and we've seen the huge, profound differences. So now it's time to put it all together and try to reach a verdict.
When you really put them head to head, is China's problem just a bigger, scarier version of what happened to Japan? Or are we looking at a completely different beast altogether?
This table really just lays it all out nice and simple. Japan was a high-income nation. China is stuck in the middle. Japan was aging, sure, but it was wealthy. China is getting old way before it's gotten rich. Japan had allies and open markets. China has rivals and trade wars. The key takeaway here is that on pretty much every important metric, China's situation just looks structurally weaker and far more constrained than Japan's ever was.
So the conclusion starts to become pretty clear. Yeah, it has all the symptoms of a balance sheet recession just like Japan, but the disease underneath is fundamentally different. What China is really staring down is the risk of a middle-income trap, where it stagnates before it ever makes that final leap to becoming a rich, developed country. Think of it like Japan's story, but with a devastating plot twist. Getting stuck here doesn't just mean slow growth. It means an entire generation's hopes and dreams get capped. And it means the engine of global growth for the past 30 years just kind of sputters out. And this trap is being supercharged by a demographic crisis and a hostile world that no major economy has ever had to face all at the same time.
So here's China's big gamble. They're basically deciding to ignore their own nervous consumers and are just pouring state money into advanced manufacturing, electric vehicles, solar panels, batteries, hoping to dominate the industries of the future. But this creates a huge paradox, right? Who is going to buy all this stuff? Its own citizens are saving, not spending, and the rest of the world, wary of this export flood, is putting up trade barriers. So the ultimate question isn't just whether this bet will work, it's what happens to the global economy if the world's second largest player fails to escape a trap of its own making.